Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Hope you're having an amazing day. We're taking a look here at Shiba Inu, seeing what's going on, helping understand the best practice and big picture, of course, for this coin. I do want to start off with a congratulations to our community members who took a nice little 30%, correction, that's 20% on target number 3 there for our Shiba Inu trade there. So it's still left open, which is great. We still got a small little piece in the pie. And the beautiful thing is we took most of our profit and it wants to run. We'll take some more. If not, we're good to go, right? So again, congratulations to my members. And once again, I was kind of prefacing yesterday with our video. If you saw that, hopefully you watched all the way through and understood the reasoning behind taking that trade because again, previous support level turned resistance, turns support, okay? So again, just that standard situation that occurs when you flip from a bearish situation to a bullish type of situation. And keep in mind, there's always channel trading right between, basically range trading before it takes off. Okay, so again, we broke this descending trend with lower highs and lower lows, breaking above that trend line. Price goes range bound, retests the same level multiple times, and then it just continues upwards, right? So now we've broken bullish, so you're more likely to you'd be better off, better equipped if you were to consider the price is going to go up more so than the price is going to go down. Okay, now there is a chance this candle wick could be just a big one, it comes back down, but it's very low probability because of that. And the reason why is because we have a tremendous amount of volume pushing through here. Okay, so again, yesterday and today, a significant amount of volume. Today's trading day still has 7.5 hours left. So we're good to go here. So all in all, Shiba Inu is looking very strong. I think a continuation would be likely. And how high? We'll talk about that because right now we can see that 0.5 Fibonacci retracement level is essentially holding the price action in place. All right, so before we get started, I just want to ask if you could help us grow our Twitter community. Greatly appreciate that. We got a good, 7 or 8 followers yesterday from our videos, so it's really awesome. Thanks again so much for that. Likely some of our Shiba Inu viewers jumping on over there. Then we got good technical and fundamental data there. I put out daily price analysis as well as some potential playout charts. And the potential playout chart for this one is looking pretty good. All right, so Shiba Inu, what do we want to expect here? So first things first, what we're looking at here with Shiba Inu is a couple of standard things. First of all, we want to take a look at the price action. We can see, of course, that we broke through 70 on the RSI. That's a standard continuation situation. Okay, so whenever the price will likely continue much higher faster is when we break through that key level resistance. Now, 70 on the RSI is common resistance area. A lot of times it's reflected on the charts. We can see that right here at about 9,000 as a close approximate is probably the price in which the price had hit that level and initially either rejected or effectively broke through at 70 on the RSI. We can also see the MACD is converging here as well. Okay, so again, strong convergence. You try not to bet into that. Be very careful shorting this coin. Anytime a coin runs like this with this amount of volume, there's a lot of short squeezes that occur along the way, which is why it runs so fast. Because a lot of folks probably had their price here for their short, their stop loss and their shorts right at that 9,000 mark or 8,900, and the price just shot straight through it. Okay, so again, careful doing that. We're above most moving averages except for this one. This is the one I talked about yesterday, and I said, hey, we don't need to worry about that one for a little while. I was wrong. We actually blew through it, but we're also coming back down to consolidate at it. Okay. What that is, that's basically the 200-day set moving average at 9,900, very, very close to even 9,900, okay? So that number is important because that's a 200-day set moving average, letting us know in the last 200 days, that is the average price that people feel like it's an affordable price, okay? When you go above that, it becomes overbought, if you will, which we can see reflected on the RSI at 70 plus, and then it becomes a whole other situation. So you'd assume that the price would pull back because it's overbought, but in truth, it's averaging itself out correctly with those moving averages, and it's not technically overbought. Okay, so again, the price will stay over 70 for some time in situations like this. If we take a look back at Shiba Inu, we can see here as well that when it broke up over 70, the price action was right here at roughly about 9,500, and it continued upwards, a significant margin. What is it? It's a full almost 68% over the next couple of weeks afterwards, and that's when it broke through 70 on the RSI. Okay, so again, it doesn't mean we're just going to continue to run, but it does imply that there's a good chance that it will continue higher, and to try to start shorting now would be a mistake. Again, just one of those things. It could come down. I could be totally wrong. Just letting you know, history has a tendency of repeating itself. When you have this much volume, this much continuation, a break through those key level resistance is something to pay attention to. Now, here is something also to pay attention to if you are, one who believes in overextension, which I do like to trade overextensions a lot. But in my opinion right now, even though we are overextended, we hit up to a 9 and we're about 5 or 6 4-hour candles into this, we're still not truly overextended because of the simple fact that we have such volume in this area. Okay, so again, look at this volume, continues to increase. As it increases, the price does as well. Big surprise. But the bottom line here is that yes, we are overextended, but it's not a reason to consider shorting. Keep in mind we are over 70 on the RSI on the 4 hour as well. You start increasing the RSI levels above on multiple time frames, that we do have a larger pullback potential. Okay, so please recognize that. I again don't recommend shorting, but there is a good chance this could pull back. If it does, the next Fibonacci retracement level here at about 89.90, so we could round up and just say 9,000 even, is essentially the next key level support. Because you can kind of see the price action treaded water right here, and then it took off. Okay, so hypothetically, this should be the new support range right there at about 8,800 to 9,000. So this little guy right here is an important point we want to look at. So I know you're probably asking yourself, well, if he says not to take a short position here, what do we do between now and then? Well, hypothetically, you could short. There is some decent profit here, a good 10% you could hit. Again, key takeaway here is that you could hit that. The statistical probability is fairly low that the price is going to drop, but if it does, that would be an area it would gravitate towards. Okay, so I just need you to recognize. Anytime I make these videos, a lot of times folks will interpret waiting for a long position as shorting to that long position. It's not always the best advice, because look how aggressive these candle wicks are. There's a good chance that if you try to short right now, it's just going to wick you out, and then the price turns right back around. So again, just keep in mind, I don't think we're there yet. All right. Taking a look at the 1 hour though, bear this in mind also, we do have a scenario in which we can see we're hitting a 9 on TD sequential. We've hit 2 in a row. This is a case in point where it might be potentially beneficial to consider a short. Now, I know you're thinking, okay, hey, this guy just told me not to do it. Now he's saying to do it. I'm not saying either, honestly. I would avoid it altogether. But what I do see here is that we have an overextension on multiple time frames, and the more overextensions you have on the smaller time frames, the more likely you are to have larger overextensions. Okay, so again, you just got to recognize we've only got 1 day of strong bullish continuation. Today's the first day effectively where the price broke out. Breakouts typically occur in threes, so we should be able to see an extra 2 or 3 more days of continuation at least before the price pulls back. Look at the price action now, we can see that the price is moving up here and we've got 2 overextensions leading into it. So again, a handful of different reasons why not shorting is ideal, but also recognize that the price could pull back soon. I know it's kind of a conundrum here. The whole point of this conversation here is to let you know that big picture, we're more likely to run up than we are down at this point, because these runs typically come in threes, and we're 1.5, maybe 2 days max into this continuation. Okay. That said, I do think we could see a retest of this level here, the 10,250. So 10,250 could be a retest there. And if so, that might be the new support, because once again, 0.5 is always an initial strong support or resistance level, okay, depending on the direction you're heading. That said, I highly recommend just waiting on the sidelines for either a better opportunity at a lower price point, or waiting for the price action to establish itself first, because we are absolutely overextended. So long story short here, I got the question as well, like how much further could this run if it were to? And based on Fibonacci retracement, because again, we're looking at larger time frames here. Yesterday I had a smaller time frame chart pulled up where the price bounced perfectly off that halfway mark, that 0.5, and continued higher. I think it was like 850 or something. Or 8,500 rather. That being said, where the price action is at now, if we look at this larger time frame, which is roughly about a full 6 to 7 months worth of trading data here, we can see we retested that halfway mark. The potential for the highest high, in other words, if the price were to effectively double and get up to this level here, would be about 15,750. That would be a better case scenario here. Again, we got a lot of ground to cover between now and then. 0.618 is a very strong resistance at 11,600. So just know here at this point, this is a level that we're going to have some difficulty with first. So if we break through 0.5, I think we need to talk a little bit more about 11,500. And then, of course, it would be 15,600, 700 after that. But in truth, a lot of these things, like I mentioned before, they come in threes. So oftentimes there's a candlestick pattern referred to as 3 white soldiers, where we see 3 strong candles in a row. Okay, so we could very well see 2 more strong green candles to retest that 0.618 level. And then at that point, the 4th day is typically a red day, so it should be a bearish engulfing candle. Once again, we're still premature. We're 1 day into this continuation. But the truth be told, this has a lot of strength, a lot of volume. The pullback may not be as strong as you'd like to think. Okay. So again, even though yes, we are overextended, my money is on the price going up sooner than it would go down. But we could very well see, if we do see a retest, that's why I considered I would say consider a long position at this level here, right about the 9,000 mark, instead of trying to short to that level. Because shorting that level is dangerous, but longing from that level is less dangerous. Okay, just keep that in mind. All right, so hopefully I drove that point home. Sorry, this is a long-winded video. I just went on a rant there. Either way, I hope you appreciate this and can learn from this. And if you're not familiar with what I'm talking about now, it might be best to go and watch yesterday's video to understand how I came to the conclusion as to why we took this trade. Okay, so again, our community members, we all benefited from this. It's nice. We got a handful of other swing trades out there. Some not doing as well, but they're designed to be able to survive these type of ebbs and flows of when Bitcoin decides it wants to yank down to 28,000 range, right? Either way, I hope this was beneficial. Thanks again so much for joining me here. Again, you want to become a better trader, cryptocash.tech is a link down below. We have a summer sale. All that information is available on our Twitter and, of course, in all of our descriptive videos. Hope you have a good rest of your day. Thanks again for your time. We'll see you next one.